Hello, good morning, ladies and gentlemen. Hello, good morning, ladies and gentlemen. Hello. Can I get some feedbacks that you can see my screen and you can hear my voice clearly by typing hi in the comment section so that we can get the session started? So if you can see my screen and you can hear my voice clearly, I would appreciate that you type in hi in the comment section so that we can get this started. So I'm trying to load up my comment section so that we can get some feedback so that we can get this started. All right, thank you 946. Thank you very much. Good morning. Sarambo, good morning to you. Akimazama, good morning. Thank you very much. Banzati says no screen. What do you mean by that? Probably rephrase your statement so that I can get a better understanding into what you mean. Okay, so I would like to take this as a confirmation that we are good to go. I am excited to welcome you to another promising session on the X-Trend Speed. My name is Sheriff Daramola, and for the next 1 hour, I will be your anchor, where I will be taking you on a trading journey, evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. Well, it has been a very profitable 24 hours as we begin to see some traction during the early hours of today. So we are going to be looking at how well the pairs that we reviewed yesterday are doing so far. But before we go into the market, let's run through the economic calendar to see if there are any macroeconomic events we want to be looking forward to for today. And you know that whenever we have a macroeconomic event like this, majority in the market, participants in the market will definitely be anticipating this event, and we shall be seeing the anticipation reflected on the chart as price action, and this price action will be giving us a clue of where the price movement will be going against the New York session. So on the economic calendar here on Tuesday, January 24th, we have some couple of macroeconomic, high impact macroeconomic event for we have for the euro, which we don't have any pair we are monitoring on that one, so I will skip that one. Then, and how I go, we have the S&P publication, CIPS Services PMI for the month of January, and that is affecting the pounds. And what we can see here is that the data fell below expectation as the consensus were projecting a 49.9, but what we saw here is a $48, giving us a negative variance of about minus 2.90, which is quite huge if you would ask me. And it appears we have been seeing the reflection of this below expectation data that we saw here in the market, and we shall be looking at that in a moment. Then we also have the President Lagarde speech coming up as well. That is not really what we are going to be looking for. So I think for today we only have the GBP, and all the rest we will be using our technical skills to identify trading opportunities for today. So with that being said, we shall be diving right into the chart right now. And the first commodity we are going to be looking at this morning is the US oil. So before we go into what our expectations will be like for today, let's quickly run through what our expectation was as at yesterday, what we were looking at, what we saw, and what we planned to do during the New York session yesterday. So during the live session yesterday, we were around the $82 level, which I told you that we could take advantage of a buy position right above that structure. And the reason why we were thinking of buying at that point was because of the simple setup we were able to identify at the beginning of the week, as we saw how price action was caught initially within this channel with the resistance point sitting at the $81.80 level and the support level of the channel sitting around the $81.20 area. And you know that from a technical standpoint, whenever we have a channel like this, all we need to do is to remain patient and wait out for either a breakout or breakdown of the channel to give us a trading opportunity. And what we saw later on yesterday was quite interesting here, as we saw the breakout of the $81.80 level, giving us an opportunity to buy, and that also led to the breakout of the $82 level here, giving us another opportunity to add more position to our existing trade. And in fact, after the triggering of the second position, price action continued to fall within a consolidation phase here, as we continue to see some buy pressure around the $82 level and some selling pressure resume around the $82.60 level to give us a sign that there is an indecision at this point. And I do hope that those who took advantage of this opportunity yesterday moved your stop loss accordingly, as price action took us out of that position at break even. As you can see, price dropped below the structure at below the $82 level to culminate at the $81.50 level. Now, one thing that happened here on the USOil yesterday was the fact that as soon as price tested the $81.50 level here, we started seeing some buy pressure coming in from that structure. So during the later part of the New York session yesterday, we saw some buy pressure here, and then during the early hours of today, we also saw another buy pressure at this point. So if we take into consideration this engulfing candle, then definitely we want to be seeing price action break down this $81.50 level to give us a bearish signal that sellers are really strong in this market. And a couple of hours ago, we saw the breakdown of that structure, which I actually took advantage of here, and I shared this on my public platform, where I will be looking forward to a retest of the structure to incite another wave of bearish momentum. So going into the New York session today, we have two structures we shall be using to guide trading activities for today. And if we look at what we have here since the beginning of the week, though we have an initial bullish momentum that started the week at the $81.20 level here, but one thing we observed is that as soon as price tested the $82.60 level, we saw sharp rejection of that structure multiple times to give us a clue that sellers are beginning to come in gradually in this market. And if we look at the structure here, and this one here, you can see we have a lower high, and if we connect the series of lower highs together here, we have a bearish trend line to guide our trading activities for today. So in that regard, I will be using this trend line here to guide our selling momentum going forward, as we have identified this current structure. Now, in addition to this bearish trend line is the $81.50 level, which I laid emphasis on a couple of minutes ago, emphasizing how that level had been holding buy pressure for some time between the later part of the New York session yesterday and during the early hours of today. You can see we have been witnessing buy pressure there before the breakdown of the structure finally happened an hour ago. Now, with the situation we have here, we are going to be using the $81 level, 50-cent level in coupled with this bearish trend line to continue to guide our selling momentum. So how do we want to be using this structure to guide selling momentum going forward? Well, as we can see here, we already have a breakdown of a structure of the $81.50 level, and it appears price has done a retest of that structure, giving us a confirmation that we could be in the sell position at this point. Now, if a further breakdown of the $81.20 level happens, this will be welcoming an additional position to our existing trade here on the USOil for today. So as long as price remains below the $81.50 level or this bearish trend line that we identified here, we will continue to remain comfortable in our sell position, and we look out for selling opportunities, look out for selling structures. It could be trend continuation patterns following this impulsive move. For instance, now we have this impulsive move to the downside. We could see a situation where price will fall within a trend continuation pattern, let's say a bullish rectangular pattern, for instance, breakdown, retest of structure. Then we'll continue to think of adding more position to our existing trade. So for the US oil, like I said, we'll continue to look out for selling opportunities below this trend line and the $81.50 level. Now, with that being said here, we should also take into consideration if bullish momentum comes in here. So for us to buy the US oil, we would not be thinking of any buy position except price action takes out all the sell position that we have been witnessing around the $81.80 level in the last 12 hours. As you can see, since the breakdown of that structure, sellers that continue to respect that level continue to negate all bullish momentum from that structure. So if at any point in time price breaks out of the $81.80 level, and if you look closely into the structure, you can see how that level shares a beautiful confluence with that bearish trend line. So if price action takes us out of these sell positions here, gather some liquidity, and this will be reflected as buying pressure on our lower time frame around the $81.80 level or the trend line here, then we want to be thinking of buying the US oil, and we think of adding more position if price action breaks out of the $82.60 level going forward. So these are our views here on the US oil for today. It's quite a simple setup to use as a yardstick for trading activity. So let me replay what I explained earlier. So the first structure we are going to be using is the bearish trend line, which we are expecting which we're expecting to guide bearish momentum here. And if price action breaks out of that structure, then it's a sign that the trend line is no longer strong enough to hold selling momentum. Then we'll continue to look out for buying opportunity. That is if price breaks out of that level. Now, the other structure we want to be using to guide our trading activity for today is the $81.50 level. As you can see, this level had been a strong buying niche before the breakdown happened an hour ago, and we expect that a retest of that structure with selling pressure below that level will continue to give us selling opportunities going forward. So these are the simple setups we are going to be using to guide our trading activity for today. If you have any questions, feel free to drop your inquiries in the comment section, and I will be taking time to read through the comment section to see if there are any inquiries in that regard. So with that being said, let's dive into the next option. And the next option we are going to be looking at this morning is the US Tech. And in fact, the US Tech was a very profitable trade for us yesterday. As you can see, price action moved significantly well in our favor. So what was our expectation during the live session yesterday? What were we looking at? What did we see? And what did we expect to happen during the New York session? So at the beginning of the week, we were able to identify a simple flat channel here, right within the $11,640 level here, which was serving as a resistance point of the channel. And then we had the support level of the channel sitting around the 11,590, or if you want to approximate it, you can call it 11,600. And you can see we have been witnessing buy pressure coming in here and selling pressure around the 11,640. And one thing we said about this kind of structure yesterday is that we are going to remain patient, look out for a breakout or a breakdown of the channel to give us an opportunity to either buy or sell the US Tech. So what we were looking forward to is either price breaks down the structure below the 11,590 to look out for selling opportunities, but that did not happen. And what actually happened was a breakout of the resistance level at the 11,640 to incite a very huge bullish momentum on this one. So for those who are taking advantage of this opportunity here, well done guys. Kudos to you for being on standby to catch this move. Has price action moved how many pips in our favor? Price action moved over 260 pips in our favor before we saw this consolidation phase that happened here. So some of us will have taken our profit. Well, if you have done that, kudos to you. Well done on that, taking your profit. And for those who are not yet to take their profit at this point, I will be suggesting that we will move our stop loss accordingly to protect our position against any sudden pullback, which is likely going to be happening anytime soon. And if we are going to be moving our stop loss, where will it be? Well, for me at this point, if we look at this current structure here, as you can see, we have some level of demand structure around the $11,800 level. So I will think somewhere right below the structure here, below the 11,800 will seem most appropriate to move our stop loss to guide and secure our current buy position if you are still in this trade. Now, with that being said, let's look at the current structure here and determine what our next line of action is going to be like for today. But before I go into the details here on what our expectation is going to be like for today, I would like us to scale up a little bit to the daily time frame. Let's have an holistic view of what is really going on in this market. And for the sake of those who are not part of the live session yesterday, this will be a very good opportunity to be on the same page with us here in the community. So right now I will be scaling up to the daily time frame. Let's quickly have an holistic view of what is really going on here before making a decision for today. So right now we are back on the daily time frame, and this is what we saw at the beginning of the year, though we know that price action has been bearish for quite a while. In fact, throughout the course of last year, we saw how price action had continued to find lower highs, and as a result of this, we were able to connect the series of lower highs here to give us that resultant bearish trend line that you can see on your screen right now. And if we zoom into the current structure here and looking at what has been happening here since the beginning of this year, or we can go as far back as last month, we can see that the last time price respected that bearish trend line was here in the mid-month of December. That was last month, and that resulted in a strong bearish move which brought price back into this demand zone we cited at the 10,600. And price action transitioned into a reversal pattern in the form of a double bottom structure. With the neckline sitting around the $11,000 level, we were able to enjoy a bullish momentum after taking advantage of the breakout retest of this $11,000 level. So we joined the move all the way up into the upside here. And in fact, yesterday also, we were able to take advantage of that bullish momentum which took us into the structure, breaking out the 11,700, which is another key level that we laid emphasis on yesterday. And at this point in time, you would agree that we are at a critical point in the market. And what do I mean by we are at a critical point in this market? Well, first of all, you can see that we have this key level, the 11,700, which at one point in time had been a strong selling niche in this market. Look at what happened here in the month of September. See what happened since price broke down that structure there. We saw that every attempt by the buyers to break out of this level had been met with strong resistance from the sellers. We saw the same thing happen here in the month of October, though we have the breakout of the structure here in the month of November, but that led into a huge consolidation phase which emphasized the indecision in that market before we saw price breaking down that structure to the downside. Now that we have a breakout of that structure, and if you look closely into the structure here, you can see how it shares a beautiful confluence with that bearish trend line that we identified earlier. So at this point in time, the next question we are going to be asking is this breakout of structure going to be a signal of a new wave of bullish momentum where probably a retest of structure will be inciting the second leg of the bullish momentum? That is one perspective we want to be looking at this point. Then another perspective we want to be looking from this point in time is the fact that the breakout here could turn out to be a false breakout, and if it turns out to be a false breakout, then there is a likelihood that price will drop back below the $11,700 level, which also shares a confluence with our trend line. So that means price will come back to a retest of that trend line to respect the trend line one more time, hereby sending price action crashing further to the downside. So these are the scenarios we are going to be looking forward to here. So in order to have a better perspective into what is really going on here, we will need to scale down to our lower time frame, and let's see how participants in this market has been reacting to the current structure here around the 11,800 11,850 area to decide what our next line of action will be. So if we start seeing some reversal pattern here on our lower time frame, then we might likely be looking out for selling opportunities that might bring price back into the 11,700 to retest that structure in anticipation of another wave of bullish momentum. And if price breaks down that level, then we will definitely be thinking of adding more position to our sell position here. And if the structure we identify at this area on our lower time frame transitions into a trend continuation pattern, probably a bullish rectangular pattern, then a breakout of structure will give us an opportunity to add more position to our existing trade. That is, if we are still in the buy position. So with this being said here, let's scale back down to a lower time frame and let's have our decision for today. So scaling down to the lower time frame, so for the sake of this session, let's scale back down to our 1 hour time frame where we want to be seeing what is really going on at this point. Now if we scale down to our lower time frame, that is the 1 hour time frame, this is what we have here. Hold on a second, let me quickly run through this. All right, so this is what we have here on the 1 hour time frame. So remember, we took advantage of the buy position here above the 11,640, which gave us about 260 pips, and as soon as price got into the $11,920 level here, we saw some selling pressure, which brought price into a flat channel around the 11,880 and $11,840 level. So we had a huge consolidation phase which lasted about 12 hours, 12 to 15 hours thereabout. As you can see, price action continued to juxtapose between the 11,880 and $11,840 level. And you know, from a technical standpoint, whenever we have a flat channel like this, what we want to be looking out for is either a breakout of that channel to give us a buy signal to the upside, or a breakdown of the channel to give us a signal to do some sell-off at this point. And because of the situation here, I had my stop orders at the end of this channel, hoping that either of them will be triggered. And what I'm seeing right now is price action breaking down the 11,840 to trigger the sell position at this point. And if you had been part of this one, if you had taken a sell position there, well, kudos to you for being on standby to catch that move. And let's see how far this sell momentum will go at this point. And talking about the sell momentum here, we should agree that this is a counter trend opportunity. So if you are not comfortable taking a counter trend opportunity, counter trend position, well, I would advise that you stay clear of this one and wait out for buying opportunity to join the trend continuation. Now, talking about trend continuation here, look at what happened here yesterday. We saw this impulsive move that brought price into the 11,920, and you know, from a technical standpoint, whenever we have an impulsive move like this, there is a likelihood that a retracement phase will come at one point, as those who took advantage of this position here yesterday will definitely want to be taking some profit. And while taking some profit here, we will be seeing some profit taking activity, which will be reflected on the chart as a retracement of that previous impulse leg, probably into our golden zone area in anticipation of another wave of bullish momentum. So for the sell momentum we have here right now that has been triggered below the $11,840 level, where will our take profit target be? Well, if we take into consideration this impulsive move to the upside here and bring out our Fibonacci retracement tool, running it through the previous impulse leg here, I will be suggesting that we aim at an area between our golden zone area, which is between the 50 and the 78.6% of the previous impulse leg, as our potential TP target for this counter trend position that we are taking at this point. So for the sake of clarity, let's label this. So we shall label this a potential TP target zone for sellers, and this area also will be serving as a potential buy zone for a trend continuation to the upside. So I will put this right in the box here, and then I would give this a yellow color so that we can see things more clearly here. So here we go. So our TP target for the sell position should be falling within the 11,750 and the 11,000, probably let's put that $11,640 area. Remember, we have this breakout of structure happen here above the 11,640 yesterday. So, and from a technical standpoint, whenever we have a breakout of structure, there is a likelihood that price will come back, do a retest of that structure to incite a trend continuation in the direction of the structure breakout here. So we should be having, if we have the sell position continue in our favor, we should be having between 90 pips and a maximum of about 100 and about 200 pips in profit if price action moves in our favor. So let's continue to guide us both this bearish momentum as it continues. And one thing I will say here is that as soon as price gets into the 11,800, kindly move your stop loss accordingly to lock in some profit at this point. So with that being said here, the next thing I will be saying now is that despite the fact that we are selling right now, remember we have a buy position running and our stop loss is somewhere right around this area for those who are still in the buy position. So if price gets into this level, you will be taken out of this position while the sell position will continue to drop to the downside. You move your stop loss accordingly, lock in some profit while we look out for buying opportunity around this level during the New York session. Now, if the contrary happens here, we also want to prepare ourselves for the unexpected. And how do we want to be taking advantage of that? So in as much as we are looking out for a counter trend position here, which will be going through a retracement in anticipation of a trend continuation to the upside, we might likely see a situation where price climbs up and the breakdown here turns out to be a false one. So price will climb up, break out of the $11,880 level to give us a signal of a trend continuation to the upside. So if that happens, let's be on standby to catch that move when it happens. And in addition to that, I would like us to have a trend line which we can also use as a yardstick for trading activity for today. So we, after connecting the series of lower highs here, this is what we can find here. And we continue to look out for selling opportunities as long as price remain below the 11,840 and the bearish trend line that I was able to identify here. And if a breakout of the trend line and the breakout of the $880 level happens to the upside, then we'll definitely be looking out for buying opportunities on the US tech. So these are my views here on the US tech. If you have any questions, feel free to drop your inquiries in the comment section of this video. So I'll be checking the comment section from time to time to see if there are any questions while I move on to the next pair. So the next pair we are going to be looking at is the GBPUSD, and in fact the GBPUSD is moving significantly well in our favor. And for those who have been part of this journey, well done to you guys for being on standby to catch this move. And talking about this profit here, what was our expectations during the live session yesterday, and where were we during the live session yesterday? So to start with, we initially identified a channel between the hold on a second, between the 1.24450 level, that is the resistance level for the week, which we identified here, and we had a support level at the 1.2400 level. I will be showing you in a moment how important the 1.2400 level is on our daily time frame after taking you through a review of what we are looking out for during the live session yesterday. So I told you yesterday I took advantage of the breakdown of the channel here at the 1.2400 level, and we moved our stop loss accordingly to lock in some profit. And one thing I told you, that for those who had missed out on this opportunity here, we should either wait for a breakdown of the 1.2 to 350 level with selling pressure below the structure to join a trend continuation to the downside, And if that does not happen, if price action comes back to do a retest of the 1.2400 level, then we want to be joining or adding more position to our existing trade. So during the New York session yesterday, we saw a situation where price came into the 1.22350. We saw some sharp rejection of that level. Remember, this level had been a strong buying niche for the past 1 week now, as you can see how every attempt by the sellers to break through the 1.22350 has been met with strong resistance from the buyers. And we actually saw that traces of buying momentum here as buyers took over the market, and at this point I was seeing this as a retracement phase, looking forward to another selling opportunity if price action comes into the 1.2400 level. And at this point we were able to take advantage of this move. I hope you did. As we have projected yesterday, price action came back into the 1.2400 level, though I thought price will continue to the upside, so I identified a structure at the 1.24140, looking out for that breakout, but that did not happen as price action dropped back below the structure, breaking down this temporary bullish trend line which guided this retracement phase to incite another bearish momentum to the downside. And if you had been part of this trading journey right below the 1.2400 level, you will currently be running with over 80 pips in profit. So if you had done that, kudos to you at this point. And the next thing we want to be doing is to lock in some profit at this point. So where will our stop loss be if we are going to be moving our stop loss to secure our position here? I will be suggesting around the 1.23600 level, right above that structure, which I can see here as a very good area to lock in some profit. So if you have been part of this trading journey, kindly move your stop loss accordingly to lock in some profit around that area. Now, going into the New York session today, how do we intend to take advantage of a trading opportunity here? Now, you remember we told you yesterday that if price action breaks below the 1.22350 level, we want to be adding more position. And as you can see here in the last hour, we saw a breakdown of that structure. If you had actually taken advantage of that move, kudos to you. Well done. It's okay, no problem about that. Let's watch out and see how far this bearish momentum is going to go. And if we zoom out into the structure, remember how important that 1.22350 level is here. I told you yesterday that it shares a beautiful confluence with that bullish trend line that has been guiding bullish momentum here since the beginning of this year. So we are at a critical point in the market right now where the potential of move going either way is very, very likely here. This is the bullish trend line. It shares a beautiful confluence with the 1.22350 level, so there is a likelihood that we could see some buy pressure resume again above the structure to incite another wave of bullish momentum. And there is also a likelihood that price could break down as it has done. Selling pressure continues below the 1.22350 to incite another wave of bearish momentum. So these are the things that could happen around this area. So we really need to understand what is really going on around this area from a technical standpoint to see if we want to be adding more position to our existing trade, or we want to be getting ready to join another wave of bullish momentum. So before we go into the details of how to do that, let's quickly run through the daily time frame and see what is really going on from an holistic standpoint, and then we shall be coming back to our lower time frame to make a decision for today. So in that regard, we shall be scaling up to the daily time frame here and talking about the daily time frame. What do we have on the daily time frame? Now, remember at the beginning of the week, we were able to identify a channel between the 1.2400 level, which has been serving as a strong supply niche in this market for as far back as the month of as far back as the month of May of last year. We saw selling pressure from that level, and then when price broke down the structure in the month of June, we saw a retest of that structure, and since then price has find it very difficult to come back into that level to further emphasize the strength of the sellers at this point. And even in the month of December, we saw attempt by the buyers to break out of that structure, but it was quickly met with an engulfing bearish candle, taking us out of all buy positions there to further emphasize the strength of the sellers at this point. Now, with the situation of things here during the course of last week's trading session, we saw our price action came back into the 1.2400 level, and you will notice that as soon as price got into the 1.2400 level there, we have been witnessing selling pressure. In fact, we had it on Wednesday, Thursday, and on Friday last week. We saw selling pressure resume around that area. And at the beginning of the week as well, we saw attempt by the buyers one more time to break out of the 1.240 level. As you can see, the candle there ended on a doji and giving us a level of indecision in that market. And considering the fact that this level has been a strong selling niche, there is a high chance that sellers would likely take over this market one more time at this point. And as we can see on our 1 hour time frame, we are beginning to see traces of that thing happen around that area. So we continue to hold on to our sell position. As I've said on the 1 hour time frame, we have moved our stop loss accordingly to lock in some profit, and let's see how far the sell momentum will go. So we have a structure here, the 1.22500, as you can see here, and if price continues to drop to the downside and gets into the 1.22500, we want to be moving our stop loss again, lock in some profit, and wait out and see how price action will be reacting to this level to decide if we are going to be adding more position to our existing trade. And if I extend this line further to the future here, you can see it also falls within that bullish trend line that we have here. So let's see how price will react to that level, and if a further breakdown of the 1.22500 happens here, selling pressure below that level on our lower time frame, it will be a good opportunity to add more position to our existing trade. So with the information we have here on the daily time frame, let's scale back down to the lower time frame and also take into consideration the 1.22500 level, where we said we want to see how price action will be reacting to that level to decide what our next line of action will be if it gets to that point. So going back to the 1 hour time frame here, what do we have? So like we said earlier, we can see that price is back at the bullish trend line that has been guiding bullish momentum since the beginning of the year. Let me zoom out so that we can see, and I would like to highlight it one more time so that you can be on the same page with me. So that's the bullish trend line there. So this line has been guiding bullish momentum since the beginning of the year. And if at any point price breaks down this bullish trend line, well, that will be a good signal that that trend line no longer have a capacity to hold bullish momentum. And as you can see what has been happening here in the last hour, we already have a breakdown of the 1.2 to 350, and I told those who are taking advantage of that move there, breaking down that structure, well done, it's okay taking advantage of that. But for those who had missed out on taking advantage of this opportunity here, well, what we are going to be doing now is to remain patient and wait out and see if the market will be presenting us with another chance. And when talking about another chance here, what we want to be looking forward to are two things to join that bearish momentum. The first one is price coming back to do a retest of the 1.2 to 350, which also shares a confluence with the trend line there. Then if we start seeing selling pressure on our lower time frame, then we want to be adding more position to our existing trade. And if you are not yet in this trade, it's a good opportunity to join that decline to the downside at that level. So that is one scenario we are going to be looking at. Then the other possible scenario that could happen here is a trend continuation pattern happen around this area. And talking about trend continuation, to see that we would need to scale down to a very much lower time frame to see how price action is reacting to that 1.2300 level to decide how to join if there is a trend continuation pattern around there. So for the sake of this session, let's quickly make a quick look at what is happening on the 5 minutes time frame. Let me see what's happening on the 15 minutes time frame first. Let's see if we can have a structure around there. Okay, so this is the 15 minutes time frame, and we can see we had a sharp rejection of the 1.23180 here. So what I'll be doing now is to identify that level. So we have the 1.23, or should I use 1.23200, considering the psychological level of that price. Let me give this a blue color, I guess, and we shall label it 1.23 hold on a second, 1.23200 level here, and give this a blue color. So I hope you guys are following me as I move through this. If you have questions, feel free to drop your inquiries. And then we have a support level here at the 1.2300 level. Beautiful. That's a very beautiful psychological level there, which we should also take into consideration. So we have the 1.2300 level here, and beautiful. So we have something like this. So if we have a trend continuation pattern going on, this is very useful if price does not come back and do a retest of the structure. Okay, so if price does not come back and do a retest of the 1.22350 level, we might likely see a trend continuation pattern where price is caught within this channel, and it could actually form a wedge, a pennant, or a flag, whatever it is. What we are going to be looking out for is a breakdown of the 1.2300 level, selling pressure below that structure. Then we could actually add more position to our existing trade, or if you like, if you are not in this trade yet, then you might want to be joining that decline from that level. So this is what we are going to be using to guide trading activities around this area if price action gets caught within a consolidation phase between the 1.23 and the 1.232. So this is what we are going to be looking forward to on the GBPUSD for today. If you have any questions, feel free to drop your inquiries in the comment section as usual, and I will be running through from time to time to see if there are any questions for me or any or any updates you want to give me. No problem, I will be reading it. So that is that on this one. So is there anything I would like to say here besides what I've just explained so far? I think there is none at this point. So let's continue to watch out for bearish momentum continue to push price to the downside, and if a further breakdown of the 1.22500 level happens here, we will definitely be looking out for another wave of selling momentum if we sight selling pressure below that structure on our lower time frame. So that is that on the GBPUSD. Let me take the next 10 to 15 seconds to read through the charts and see if there are any questions before I move on to the next pair. So what do we have here in the comment section? All right. Okay, 780, good morning, thank you. Okay. Okay, 440, good morning. 623, good morning. Susie MB, good morning to you. Greetings. 2260. Mafiswana, thank you. Hey, Scott Benji, good morning to you. Glad to have you around. Okay, Steamroller again. Good morning, Steamroller. How are you doing today and how's work? Steamroller wants us to do XAGUSD. All right, I'll see if we can squeeze it into the session. I'll see what I can do about that. Okay, 425, good morning. Who else do we have here again? Okay, 139, good morning to you. Sanami 1992, good morning. All right, so in the absence of no questions, I will assume that we're on the same page. So I wish you best of luck on this one, and let's ensure that we are on standby to catch whatever move that happens at that point. So with that being said, let's move on to the next pair. I think this is the last pair for today. The gold is what we treated yesterday. Okay, so the next one we are going to be looking at is the XAUUSD rather. XAUUSD, and on the XAUUSD, where were we during the live session yesterday? So we were around here, I guess. Okay, we were around the $1,924 level, just right above that structure. That was where we were, and I told you yesterday that I have a sell position running, and at that point I was in a loss. And I told you that if you are going to be joining me in that sell position, then we want to be looking out for a position right below the $1,924 level. And in fact, at the beginning of the New York session, we saw our price broke down that structure the second time, and it moved about over 1,300 pips in our favor before we saw this bullish momentum that began again. And remember, I told you how we want to be monitoring our participants in this market will be reacting to the $1,917 level to decide if we are going to be adding more position to our existing trade, or we are going to be getting ready to join a bullish momentum. In fact, we started seeing buy pressure here, so we were taken out of the position. Personally, I was taken out, I think, with about 500-600 pips thereabout. And if you had also moved your stop loss accordingly as advised, you would definitely be taken out with some profit at that point, as you saw bullish momentum continue to climb to the upside. Now, during the live session yesterday, we identified a structure also that we said we shall be using to guide bullish momentum if at all a bullish momentum comes in this market. And what was that? Remember, we identified this bearish trend line after connecting the series of lower highs, a trend line which has been guiding bearish momentum since Thursday last week. And we said if price action breaks out of that trend line, then it's going to be a good sign that the trend line is no longer strong enough to hold selling momentum. And to further buttress the breakout of the trend line, we had a structure at the $1,930 level. So we had a buy stop right above that structure, and price action triggered the buy stop at the breakout of the 1,930. Until this moment, price is moving with about 700 pips in profit. And for those who are taking advantage of that opportunity, well done to you guys for being on standby to catch that move, as we have the first position running here, and we had another second position running above the $1,935 level. So what we want to be doing right now is to move our stop loss accordingly to lock in some profit right now, as we begin to see some selling pressure. And if you look at the major pairs here, you will notice that the US dollar appears to be getting some traction during the early hours of today. So we want to be moving our stop loss accordingly, as we have started seeing selling pressure resume again above the $1,940 level. So for me personally, I will be suggesting the $1,934 level as a stop loss area for all the buy position we are having here on the XAUUSD. And before going into what our expectation would be like for today, and considering the selling pressure we are witnessing below the 1,940, let's run through the daily time frame so that we can have an holistic view of what is really going on here. If the sell pressure that we have been noticing in the last couple of hours would continue, or probably it's a retracement of a bullish momentum to join another wave of bullish momentum. So let's quickly run through the daily time frame here, and let's see what is really going on in this market. So scaling up to the daily time frame, remember we identified a structure here on the daily time frame, and we laid much emphasis on what has been happening since the beginning of this year, because that is what is important based on this current structure. After price action broke out of this selling niche here at the $1,820 level at the beginning of the year, and since then price action has continued to find higher highs. Now, one thing we observed at the beginning of this week was that throughout the course of last week, after price broke out of the $1,900 level, we saw that buyers were unable to break out of the $1,940 level throughout the course of last week. And as a result of that, price action was caught within a channel between the 1,940 and the 1,900 to emphasize some level of indecision in this market. And you know what we look out for whenever we have this kind of channel, whenever we have this kind of flat channel, we always want to remain patient, looking out for either a breakout of the channel to give us an opportunity to buy, the trend continuation to the upside, or a breakdown of this channel to give us an opportunity to join a retracement phase, which I will be seeing as a profit-taking activities in this market, as those who are taking advantage of this bullish momentum since the beginning of the year might likely want to be doing some sell-off to make some money off whatever they had made so far since the beginning of the year. So with that being said, here we have a channel between the 1940 and the 1900, and it appears that price action is tending towards the resistance level of this channel at the $1940 level. And this is a very beautiful sign that buyers are really trying as much as possible to break out of that structure to incite another wave of bullish momentum. So will this breakout happen? That is the question we want to be asking, and we can only get an answer to that if we scale down to our lower time frame. And will this level continue to hold selling pressure? This also will be identified if we scale down to our lower time frame. So what we want to be doing now is to see how the price action, how participants in this market have been reacting to the 1940 since the beginning of this week. So with that being said, here let's scale down to the lower time frame, like the 1 hour time frame, and let's see how the $1940 level has been holding price action. So here we are on the lower time frame, and as you can see here, since last week we can see how buyers have been unable to test this 1940. As soon as price gets into the 1935, we have been witnessing selling pressure. So buyers were able to break out of the 1935 this morning, and there was a little breakout of the 1940 earlier today, and price action has come back to do a retest of the 1935. Well, for me right now, we are already in the buy position. Remember, we took advantage of this buy position at the breakout of the 1930. We had another position at the breakout of the $1935 level here. And for me at this point, I will think that a bullish momentum will be continuing here. So if you had missed out on both of these opportunities, that is at the breakout of the 1930 and the 1935, well, I will be suggesting that you have your buy stop sitting above the 1940 with the hopes that price will break out of that structure one more time to incite another wave of bullish momentum. So I'm still holding on to a bullish momentum here based on since the breakout of the $1930 level happened. Now, if we are going to be considering the fact that the 1940 will turn out to be a strong selling niche, well, we need to look out for a structure that will guide us in that regard. So if we bring out our line chart here, I want to connect this series of lower highs here, the higher lows here, but I'm finding it difficult to find a structure around this area. And if we look at things clearly here, I think I was able to find something here on my order chart around this level here. As you can see, our price, that line has been guiding price action. We saw bullish momentum from that level. We had a breakdown. We saw retest to structure. Price broke out again, did a retest, and since then price has been trading above that trend line. So going into the New York session today, we have two structures to guide our trading activities. So we have this trend line, which has been guiding bullish momentum so far since the beginning of this week, and then we have the $1935 level as a yardstick for trading activity for today. So how do we make use of these two structures? One, if price action remains above the $1935 level, we'll remain comfortable in our buy position, and if price action breaks down the $1935 level here, we will be looking out for selling opportunities. And what makes the $1935 level peculiar about the structure is that it shares a beautiful confluence with that bullish trend line. So if price breaks down the $1935 level, it will also break down the bullish trend line, giving us a sign that the bullish trend line does no longer have the capacity to hold bullish momentum. And if that happens, and if it's followed with selling pressure below the structure in our lower time frame, then we shall be getting ready to join a sell momentum to the downside. And if we continue with our sell momentum here, let's take note of this bullish trend line here, which lines up with the 1900 and okay, I think the 1930, I guess. So we should take into consideration the 1930, which lines up with this bullish trend line. So if price action gets into the trend line or the $1930 level, we want to be moving our stop loss accordingly, lock in some profit, and wait out to see how price action will be reacting to that level to decide if we are going to be adding more position to the sell position or we are going to be joining another wave of bullish momentum. So that is how we want to be taking advantage of a trading opportunity here on the XAUUSD. So if you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section and let's see how I can be of help in that regard. Now for the XAGUSD that Steamrollers introduced, I have 2 minutes left. Let me see if I can run through that chart quickly to decipher if we could be having a trading option for today. So XAGUSD right now, let's see what is happening on the XAGUSD, and I would like to look at the daily time frame first. Let's see what we have here. So on the daily time frame, we can see our price has been caught within a consolidation phase around a very important key level at the $24 level. And why have I called that level a key level? Well, if we look into the past here and go to as far back as what has been happening since the beginning of last year, we can see how that level has been a major determinant of price action. So look at what we have here in the month of January. We saw that price was trading below the $24 level, and then in the this is the month of January last year. Then in the month of February, we saw the breakout of that structure. We saw retest. So that level was holding by pressure between the month of February and the month of March. And not until the month of April we saw the breakdown of the $24 level, and since then price action has been trading below that level to further emphasize this level of strength for the sellers at this point. However, during the month of December last year, we saw our price climb back up into the $24 level, and since it's got into the structure, we have been witnessing a consolidation phase, which further emphasizes the level of indecision in this market right now. And if we look at the structure around the $24 level, you can, if we zoom out, we can see how it shares a beautiful confluence with the bearish trend line that we have here on the higher time frame. As you can see, price action has consistently respected that bearish trend line since the year 2020. And what we have here is buyers are trying to break out of that trend line, but as soon as it gets into that structure, we have been seeing selling momentum negating all bullish attempts at that level. So what we need to do here to really understand what is really going on here is to scale down to a much lower time frame, draw out the pattern this consolidation phase is going through, and then we shall be using that structure to decide what our next line of action will be. Now, if we scale down to the 1 hour time frame, so for the sake of this, let's scale down to the 1 hour time frame, and okay, let's go to the 4 hours time frame first of all to break things down gradually. So this is the 4 hours time frame here, and that is the consolidation phase we have been noticing. Then if we bring out our line chart and we try to identify, so we have somewhere around the $24.50 level has the resistance point of this channel. If we look at it from mid-month of December, mid-December last year, so we have the $24.50 level. So we shall label it for the sake of clarity. So $24.50 level here. Let's place it at the top right hand side, and I will increase this a little bit so that we can see things clearly. Then we have the support level sitting at the 23 okay, so I'll be using the $23.20 level. Okay, $23.20 level here is at the bottom right hand side. So we have a channel already now, And as you can see here, since the month of December, on the 20th of December, since price climbed into this channel, we have noticed that there is an indecision in this market. So if we are going to be looking forward to trading opportunities here, we can see how the $23.20 level has been a strong demand zone. So for the sake of this session and make things easier for us to see, I would like to identify that area as a demand zone. Okay, let's label it the demand zone, and so we have a demand zone sitting right inside here. I'll give this a white color, and okay, so we have a demand zone here, and then we have a supply zone above the around the $24.50 level. Okay, so we have the supply zone here. Good, beautiful. Now, what has been happening since the beginning of the year? We have seen our price. Okay, price action has been bearish since the beginning of the year. So since the beginning of the year, we have been seeing selling pressure from here. And one thing about the bullish momentum from this level is that you can see here that price was unable to come back into the $24.50 level. The second time it did that, it ended at the $24.20 level before this engulfing candle brought price to the downside. So there is a likelihood that we could be having some selling pressure coming in here. And to identify that, we have a bearish trend line that we can figure out around this point. So going into the New York session today, we shall be using this trend line to guide trading activity for today. So what we are going to be looking forward to is this. As this bullish momentum, we saw the sharp rejection of this level to the upside here. If we start seeing selling pressure around this bullish trend line, we might be getting ready to join a decline to the downside. And if a further breakdown of the $23.20 level happens, we want to be adding more position to our existing trade. And the reason why we are looking for bearish momentum here is this. Look at what happened since the month of December. We saw that price was unable to break below this level. Sellers were unable to break below the $24.20 level until the New York session yesterday, where it was sharply broken to the downside, and then we saw that move to the upside here. So that means sellers have the capacity, they have the capability to break down that structure. So that's a beautiful sign that sellers might likely break down that level. So if we start seeing selling pressure anywhere around this level, we want to be risking a sell position, and if that leads to a further breakdown of the $23.20 level, we want to be adding more position to our existing trade. Now that is that for the selling expectations here on the XAGUSD. Now what happens if price breaks out of this trend line? And if price breaks out of this trend line and then does a retest of that level, then we will be looking out for buying opportunity on our lower time frame to join a rally to the upside. And if a further breakout of the $24.50 level happens, we want to be adding more position to our existing trade. And to make things easy for us here, I would like to identify a structure here which for me falls around the $24 level here, so we can easily use this to guide trading activity. So we have the $24 level. I will show you why that is important now. Hold on a second. Let me make this a little bit smaller, and then I will be giving this a dark green color. Okay, so I'll be showing you why this is important. Now look at what happened here last week. We saw buy pressure before the breakdown happens. We saw selling pressure here again. At the beginning of this week, we saw the selling pressure below this level. So if this move goes into the structure, then it breaks out of the $24 level to the upside. That's going to be a bullish signal. And if price comes back, does a retest of that level, with retest of the trend line as well, with buy pressure above this area or around this area on our lower time frame, then we want to be anticipating a trend continuation to the upside. And if for the breakout of the $24.50 level, we'll welcome additional position. So that is my view here on the XAGUSD. I hope Steamroller is still in the room. If you are, let me know, and if you have any questions, feel free to drop your inquiries in the comment section. while I move on to do a recap of what we have done so far today, I'm already out of time. So let's run through what we did today so far and what our expectation is going to be like. Okay, Steamroller, I see you. You're welcome. All right, moving on now. Let's move on to what we did today. So the first commodity we looked at today is the US oil. And what did we notice on the US oil this morning? And what are the structures we are going to be using to guide trading activity? Okay, so I've been taken out of my sell position right now as we join the breakdown of the $81.50 level, as you can see here. And one thing we said here is that we are going to be using this trend line here to guide our bearish momentum and the $81.50 level. So since I've been taken out of the sell position here, so the next thing I'll be doing now is to have another sell stop order sitting right below the $81.50 level with the hopes of joining a trend continuation to the downside. And if that happens, price continues, breakdown of the $81.20 level will be giving us an opportunity to add more position to our existing trade. So that is that for the selling opportunity here on the US oil. Now, if price action breaks out of the $81 level, considering the fact that we have this bullish candle here, so it's not an engulfing candle anyway, and with the sharp rejection of the $81.20 level, and look at how this level has been a strong buy niche since the beginning of this week. If this buy pressure we have been observing here leads to the breakout of this bearish trend line, then the bearish trend line is no longer strong enough to hold selling pressure. And if we are lucky enough to see buy pressure above the $81.80 level, we want to be joining that rally to the upside. And with a further breakout of the $81.60 level, we will be adding more position to our existing trade. So for the New York session today, we have two structures that will be guiding our sell momentum. The first one is the bearish trend line, and the second one is the $81.50 level. And to guide our buying position here, we want to see a breakout retest of the $81.80 level to join a rally to the upside. So best of luck on this one as we be on standby to catch either of these opportunities that will be coming in for us during the New York session today. Then we went on to talk about the US tech for today, and we had a sell position triggered below the 11,840. And for those who are still in the buy position that we took advantage of here yesterday, I told you to move your stop loss to somewhere around the 11,800 to lock in some profit here, while we have our sell position triggered right below the $11,480 level. And for guiding our trading activity for today, we have identified a simple setup where the bearish trend line we connected here is standing there for us to guide selling pressure, and this $11,840 level continue to guide our selling momentum. So how are we using the structures? As long as price remains below the structures here, both of the structures, we will remain comfortable in our sell position. And like I said, our TP target is sitting right between the $11,760 and the $11,660 level, where we said we are going to be looking out for buying opportunity to join the second wave of bullish momentum. However, if price breaks out of this trend line, breaking out of the 11,880 retest of structure should be welcoming additional position to our existing trade on the US tech. So that is that on the US tech. Then we went on to talk about the GBPUSD, where we've been enjoying a bearish momentum since yesterday as we took advantage of the selling opportunity below the 1.2400 level here. And during the early hours of today too as well, we saw another opportunity to add more position to our existing trade. Then we also had in another position right below the 1.22350 as price action broke down that structure. And for those who had missed out on this opportunity, I was able to identify a simple setup here on our 15 minutes time frame where I said we can use it to guide a trend continuation at this point. And this setup will only be useful if price action does not come back to do a retest of the 1.2223 350 level. If price does not come back there to incite a bearish momentum, but instead price action is caught within a channel, between the 1.2320 level here and the 1.2300 area, then we'll be waiting for a breakdown of the structure to join that decline to the downside. And if you're already in the sell position, it's another good opportunity to add more position to your existing trade on the GBPUSD. So best of luck on that one too as well. Then we went on to talk about the XAUUSD, the gold, where we took advantage of some bullish momentum as price action broke out of the 1,930 during the later part of yesterday's trading session, and we had another position at the breakout of the 1,935. And one thing we said first of all is to move our stop loss to break even here, and we suggest around the $1,934 level as a stop loss level for all buy positions that we have on the XAUUSD. Now, to guide our trading activity for today and considering the bullish momentum since the beginning of the week, we were able to identify a trend line which has been a major determinant of a bullish momentum on the XAUUSD since the beginning of the week, as you can see here. And we said if this trend line continued to hold bullish momentum leading to a breakout of the 1,940, breakout of that structure will be a very good opportunity to add more position to our buy position here on the XAUUSD. However, if price breaks down the 1,935, which also shares a confluence with the bullish trend line here, then it's a beautiful sign that the trend line is no longer strong enough to hold buying pressure. And if this happens, we want to be looking out for selling opportunities on our lower time frame if we start sighting certain pressure below the structure on our lower time frame. So let's be on standby to catch this one when it happens. Then we close the day with the XAGUSD introduced by Steamroller, where we were able to identify a simple setup here on our 4 hours time frame, and we saw our price has been caught within a channel. I'm trying to load up my chart here to see. Okay, so we have a beautiful channel here on the 4 hours time frame as price action has been consolidating between the $24.50 level right here, which is the resistance level, and the $23.20 level since the month of December last year. And with the situation of the sudden breakdown of the $23.20 level during the New York session yesterday, during the early hours of yesterday, it's a very beautiful sign that sellers are gradually gaining some traction. As you can see, they were unable to break the $23.20 level for over 6 to 7 weeks, but finally we saw the breakdown of that level here. Is a very beautiful sign that sellers are beginning to gain some momentum at this point. So how do we want to be taking advantage of this setup? Well, we have identified a trend line here, and we said if this move goes into this trend line, an area which shares a confluence with the $24 level, and we start seeing selling pressure around this area, then we want to be getting ready to join that decline to the downside. And a further breakdown of the $23.20 level should be giving us an opportunity to add more position to our existing trade. Now, if at any point in time, if price breaks out of the $24 level, what do we do? So if price breaks out of the $24 level, a level which shares a confluence with the bearish trend line, then it will be a sign that the trend line might no longer be strong enough to hold by certain momentum. And if a breakout happens, remember, we are not getting too excited with this kind of structure. We want to wait out for a retest of the structure on our lower time frame, look out for buying pressure around that area, then we join the rally to the upside. And if a further breakout of the $24 level happens, we want to be adding more position to our existing trade. So these are my views here on the XAGUSD. We were able to trade the USOil, the US Tech, the GBPUSD, XAUUSD, and the XAGUSD for today. So that's 5 opportunities lining up for us during the New York session today, and I was able to make things a little bit simpler for us to take advantage of any potential trading opportunity. Remember that we don't want to get too excited whenever we have a breakout of a structure. Whenever you sight the breakout on your 1 hour time frame, you want to be scaling down to a much lower time frame like a 10, 15 minutes or 5 minutes time frame. Look out for retest of structure supporting the direction of the breakout before opening a position. So thank you for being around. I really appreciate your attention. It has been a wonderful moment, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, so that we can gather here once again to review all the pairs we have been monitoring since the beginning of the week and get ourselves prepared for the New York session tomorrow. Do have a wonderful evening. Bye bye.